help us understand what's happening here. But most importantly, if you could put it in the context of the valuations, because clearly there has been a massive rise from the context of some of these companies being private companies to all of a sudden jumping in the public markets, both in the IPO context, but now in the SPAC context.
Sure. Well, I think that if you think about this current wave of SPACs, it's a third option now for going public, right? There's always been traditional IPOs. And then with Spotify and others, there was the direct listing. And now for these companies that have reached this sort of late stage, high growth, now SPAC is another option. It's a faster process oftentimes than a traditional IPO in terms of how quickly you can become public. And I think that what you see with the valuations is the same thing that you see with their more traditionally IPO'd brethren in the same sector. So you look at things like electronic vehicles and software and consumer internet, the public market multiples are high. And when these companies go public via SPAC, which is just another mode to go public, you're seeing similarly high valuations.
Okay, which process do you think has more scrutiny? Because the critique of the SPAC is that a lot of these companies are coming public, are not being scrutinized in the same way that they would be in an IPO, and that the rules allow for them to make forward projections and the like to the public in ways that an IPO you're not allowed to.
Yeah, certainly. I think your traditional IPO, there's more process that goes in place beforehand, right? So selection of underwriters, the time where you file with the SEC, when first confidentially, and then you go public, and there's the entire roadshow, which I don't know if anybody loves in the days when you used to fly around all over the place. But even now with virtual roadshows, there's the process of meeting with potential public investors that you don't get that same process with a SPAC. So it's clear that there is more scrutiny, there are more points in the process, a longer process with the traditional IPO than with the SPAC. But I think in all cases, right, sorry, go ahead.
Well, no, what I was going to say is, SPAC sponsors would say, look, the public is trusting us to do the diligence. And ultimately, because there's a vote, there is a remarkable amount of diligence being done by the investor class. I have to admit, I'm skeptical about that, but I'd love your view.
I'm sure there is a lot of diligence that's being done, but the question is who gets to do that diligence? In a SPAC situation, it's only the SPAC sponsors. In a traditional IPO process, it is all of the institutional investors, but also the retail investors get access to that. Everyone gets the same information in a traditional IPO filing. I want to separate out, and I don't know, draw some analogies to me, sort of to the 99 bubble, right? There's SPACs that are companies that are late stage market leaders, high growth, and they're choosing, do I want to go public in one of three ways: traditional IPO, a direct listing, or a SPAC? And then there's what we used to call in 99 concept IPOs, or more concept SPACs. These are earlier stage companies that probably aren't far enough along in terms of revenue or production, even in some cases, to withstand a traditional IPO process, but they're able to go public through a SPAC process at a much earlier stage. So there's what I would think of as later stage growth companies where they're just deciding, do I want to go public more quickly? And that's why I'm thinking of a SPAC, or do I want to go through the process, which has the other advantages that we spoke about in terms of being able to market to public shareholders in a traditional IPO process. These concept SPACs, if you look at the analogy I would use there is Nikola, right? So went public in June, doubled very shortly, and is now trading lower than the initial issuance. And then there's sort of later stage companies that decided to tap into SPAC instead of a traditional IPO, maybe a company more like DraftKings, which also went public in 2020 and conversely has traded up very nicely.
Right. When you look, I don't know if you can see our screen, but prior to showing Nikola on the screen, we were showing the CNBC 50 relative to the S&P 500, and clearly there's an outperformance, at least right now. If we were to show that chart 12 months from now, 24 months from now, 36 months from now, how do you think that chart would compare?
I don't know. I unfortunately can't see the screen, but I'm sure I've seen it, that it is outperforming. I think the right analogy again, to my point about there's SPACs and then there's traditional IPOs, is comparing sort of the SPAC 50 to the 50 most recent traditional IPOs, right? If you think about companies like a Snowflake or an Airbnb, I think that's the right comp, because the S&P 500, those companies, most of them, many of them have been public for many years, if not decades.
Shepard Smith here. Thanks for watching CNBC on YouTube.